So that's a trading advice. Actually, let's get a trading advice on the chart of the day before we get in Mayuresh Joshi as well. And Sikin Narayan, what is the chart of the day? Is it a large cap? Is it a mid cap?
Well, it is something from the cash side, which it kind of hovers somewhere in the middle. So that is Monsanto. I think the stock needs no introduction, high pedigree, high acceptance. What I'm seeing on the chart is a consistent bottom formation over the last, let's say, month or month and a half. And in a very, very poor market such as the one we are having today, it's been up and about very nicely. What is also more interesting on the chart is the range shift that one is seeing on the momentum. With the similar bottoms, the momentum on the current low, which is the same as the previous one, has been substantially better. This usually indicates that the stock trend will revive from the current levels. And the price action today has been pretty robust, indicating that fresh buying has come in. So I would recommend a buy at the current price. You'll have to maintain a stop at about 100 points at least. So at about 2475 or thereabouts, you should look to buy it, keeping a stop of at least 125 points, and look for a target at around 2700 rupees at the bare minimum.
Okay, that's one more perspective on Monsanto coming in, a stock which is holding out, mind you, in a market largely weak and down. But important flashes on your screens, and just an alert there, George Soros is speaking at an economic forum in Sri Lanka, and these are exclusive flashes coming in about the veteran fund manager and what he feels of the current market environment. He's saying that he sees the crisis in global markets that echoing of 2008, when the big global financial crisis hit the world and sent stocks into a significant bear zone. Investors need to be very cautious, is his second word of advice. And then, of course, he's saying that China's devaluation is hurting the rest of the world. Remember, it's either way being talked about how China is exporting deflation to the rest of the world. So lower inflation prints are just a reality of oversupplies coming in from China. And then, of course, the fact that China is struggling to find a new growth model. This is reflecting the transition phase that the Chinese economy is in, where they're moving from being export-oriented to building domestic consumption. And it's a prolonged period of about 5 years over which one will see whether that transition plan works out or not. And the data points coming out next week in terms of retail sales and the production numbers would be key to that. And the last point that he's made is that China has a major adjustment problem currently, which is what we've seen already happen earlier on in the session with the depegging of the yuan in the onshore market. You had a big sell-off come into the offshore market as currency traders adjust to the new reality of the yuan, which is a weaker yuan from here on, as the central bank in China would want the yuan to break its peg against the dollar, to enter the SDR basket, to reflect the current state of the economy, which is slowing, and also perhaps find some share in the export pie, with staring at more currency competitiveness.
The key, he believes this is a reminder of the crisis we had in 2008. Mayuresh Joshi, do you feel that the levels are looking that ominous?
Afternoon, Neeraj. I think clearly at this juncture, I probably don't think so. However, I think the unknown factor is what data might keep on coming out of China. And again, I think the large uncertainty that the domestic market is probably throwing up. So clearly, if you look at how the quarterly numbers are stacked up or expected to stack up over the next 2 quarters, Neeraj, largely out of Nifty, I think IT is expected to underperform for the next 2 quarters. You're probably looking at banks cleaning up their balance sheets over the next few quarters, which means that the stress on their asset quality will continue over the next 2 quarters. You're probably looking at capital goods as a sector stroke infrastructure clearly struggling with margins getting compressed. There is weaker execution coming through. There are working capital constraints. On the FMCG side, you're probably looking at volume degrowth probably happening in terms of a quarter-on-quarter performance, and that is largely to do with how the discretionary spending is happening. So where is earnings going to probably come from? I think earnings might probably come from pharma, and again there the valuations are a little bit on the higher side if you look at their trailing historical averages. So clearly I think earnings not expected to recover for for the next couple of quarters. You're probably looking at the capex cycle, which is getting delayed again. And clearly, I think the private capex is showing no signs of pickup at all. So in that sense itself, I think there are very few triggers that the markets are probably working out. And you might just follow the international markets till that point of time unless clarity emerges on what kind of reform measures are probably initiated in the budget session. So clearly, you're looking probably at the markets weakening following global cues. And clearly, I think investors should be very, very cautious because the markets are headed for volatile times. You're already seeing that today, and that might just continue over the next few months.
My question to you, Mayuresh, is now on specifics. What do you do with, say, a Larsen & Toubro, which is trading at fresh lows?
So clearly, Neeraj, I think if you look at the pros and the cons for the stock, the pros is that it's got a very reasonable order book of close to 2,44,000 crores. And that is quite reasonably spread. 72% comes from infrastructure, which again has clearly slowed down in terms of EBIT margins. If you look at the Q2 performance, the EBIT margin from the infrastructure side came at 7.2, 7.4% compared to 10% on a year-on-year basis. Clearly, I think the other two segments, including heavy engineering, the materials and the metallurgical handling segment, are struggling in terms of EBIT. So clearly with oil prices going down, you're probably looking at the international order book, which constitute 28%, getting a hit in terms of how the margins might pan out for that part of the business. And clearly, I think though the order book might provide revenue visibility, you're probably looking at orders slowing down, the margin compression happening, and even if you're talking about the non-core asset sales taking place, I think the recovery in terms of earnings for a stock like Larsen & Toubro is going to be extremely slow and gradual. So again, I think investors who have a time frame of more than a couple of years can probably look at the stock on declines. But let's understand this point very, very clearly, that over the next few quarters, to say the least, the stock might underperform unless there is significant contribution and earnings trajectory happening from both hydrocarbons and the respective segments that I was talking about. So unless you have got a long time frame of more than 2 years, I probably think you should wait on the sidelines and wait for results to come out. The stock might correct further in that case itself.
Okay, I think before we go across to our dealer desk, to our research desk to get a quick perspective on what dealers are suggesting in trade, and of course our experts are right here with us to take us through the last 10 minutes of the session. I still want to revisit George Soros's comments, just for the benefit of our viewers, coming in exclusively to ET Now, stating that he believes, global markets are facing a crisis similar to that of 2008, and investors need to be very cautious. China is struggling to find a new growth model, and its currency devaluation is transferring problems to the rest of the world in the form of deflation. A return to positive interest rates is a challenge for the developing world. China has a major adjustment issues, and I think this is something that would perhaps call for greater debate. He's saying that China could be amounting to a crisis. The current situation in China could be at the heels of a new crisis. When I look at the financial market, there is a serious challenge that reminds me of the crisis we had seen in 2008. And that's 9 years back. So it seems like we've come full circle since then. That's 2.5%, 75.60 coming in for the index. And we are tracking the 52-week low on the index, that is. So 7559 on the Nifty as we speak, 2.5% lower and still ticking down into the last few minutes of trade. Does it give that sense to you as well at this point in time that you are perhaps looking at another crisis in the making? Is that how nervous dealers are?
I think people track the news flow, and I think today the news flow has been bearish.
Sandeep, I just want to, I think we've hit a fresh low for the Sensex. 24,830 and I think the previous low for the Sensex was 24,833. So I think on the Sensex we are trading at fresh 52-week lows. Keep that in mind. The Nifty is probably at the day's low, but I think intraday basis we've touched that fresh 52-week low for the Sensex as well. But sorry, Sandeep, you were making the point.
So I think two things stand out in China, which people discount. One is the overall Chinese government debt to GDP still is very low at around 20%. And the second is their huge forex reserves of $3.3 trillion. So I think these can take care of, these can contain the crisis to a great extent.
So the whole crisis you think is unfounded right now?
I think so,
okay.
Yes.
Okay, so what we are seeing right now is perhaps just adjustments being made in the markets and the economy as part of their larger transition plan. I think Darshan is ready with a quick perspective what dealers have been saying over the last 1 hour into the last hour of trade. We are on the brink of hitting a 52-week low on the benchmark indices. I think on the Sensex we've already taken that up. Darshan, is the feeling the same? Because you just sent out some quotes of George Soros from speaking on the sidelines of a economic forum in Sri Lanka. Is that the larger feeling in the dealer community?
See, basically, if you're looking at the options data and what I spoke to people, 7450, 7500, probably 7400 to 7500 is the range that they are saying that could probably be the resistance that that will be support, sorry, for the market that is they are looking at. But they don't have too much positions as far as FNO is concerned. Overall, there is significant amount of issues. But what they're talking about, some of the counters after the big fall, which should be accumulated. If you're playing crude, the airline stocks should be accumulated. You've seen how Jet has managed to rebound. Indigo will be the best play. And even if now crude starts inching up compared to its peers because of the fleet and its lease model, Indigo will be in a much better position compared to Jet or SpiceJet. So that one. And oil marketing companies are the other sector which dealers are saying that there is a lot of potential now given how crude is behaving. The other one is SKS Microfinance. Now if you're looking at it, even in a rather weak market over the past 3-4 days, the counter has managed to hold up. Today it's down just 1% when the entire market, the frontline stocks are down 5 to 6%. So they are saying HNIs are accumulating this counter on every decline. And among the pharma stocks which are seeing a lot of sell-off, Wockhardt and Ajanta Pharma are something that they are recommending on every decline. Wockhardt, they're saying there's nothing more wrong that can go on the counter. Everything is under import alert. So even in case there is a positive news that comes out of any of the plants, this counter will move. And Ajanta Pharma, there is a general buzz of a possible corporate announcement in terms of a US FDA approval that could come in. And that we are hearing for the past 2 or 3 days. And that is what is being said in the market.
Thanks, Darshan. Thanks for that. Fresh lows for the Sensex. That's the headline, really. 824,838. The previous was 833. So we are at fresh 52-week lows for the benchmark index. That is the Sensex. The Nifty is maybe 15 odd points away. But yeah, we've hit the Sensex. Bring up the Sensex. That is the one which is trading at fresh 52-week lows for itself. Let's get in closing strategies from all our experts right now. But this is the breaking news. The Sensex is at fresh 52-week lows. CK Narayan, your closing strategy.
I would go short in a BHEL at the current price, 154, 155. Stop overboard 158. Look for a price target at 149. And I would buy a Sun TV at about 409, 410. Stop around 403 and look for a target at 420.
Okay, a buy. Sikinara, you will buy a Sun TV, you are saying?
Yeah, that's correct.
Okay. Mitesh, what about you? Your top closing strategy?
I'll have a sell on Shriram Transport Finance with the stop at 835 and look at targets close to about 785.
Okay. Mitesh's call is on Shriram Transport Finance, a sell call there. Sandeep Wagle, what about you?
Just sell in a Tata Motors DVR at 256, 256.50, stop loss of 259, target of 245.
Look at real estate stocks too. They've come down like, well, anybody's guess right now. Indiabulls real estate is down 10%, almost everything else as well. And yep, these stocks too will take it on the chin in the current session. Sandeep, I know you don't wear a trader's hat per se, but you were just mentioning that if you are indeed looking at the next 10 to 15 days, might be useful to trade some of the stocks which are trading at fresh lows. What would you be doing there? Irrespective of a trade, you think that these stocks will continue to head lower?
I don't think so. I think we are more near a panic button rather than there being significant downside from here. And I think these are the stocks which were most speculative, like the ADAC group and the other real estate stocks you were talking about. That's where the retail frenzy was, and that's where those retail investors got in on F&O trades. So I think there the recovery might be slower, but the larger cap recovery I think should start quite fast over the next few days.
Yeah, maybe the bounce back would start from the large caps, but for now it doesn't seem that comforting. 75.60 on the Nifty, down 2.25%, and down nearly 4% for the small cap index, down nearly 3% for the mid cap index. And look at the way commodities have fallen, those related stories. So Vedanta, derivatives essentially, Vedanta, Tata Steel, they are your key losers, followed by Ken, which is down 8%, so that's a crude reality. And then you have, of course, BHEL, Tata Motors, and the entire financial space, where you're seeing cuts of anywhere between 4% to 6% on an average. So this does not augur very well for market sentiments stepping into trade for tomorrow and also closing out trade pretty much at the low point of the session today.
Jacob, Reliance Industrial Infra, both of them down. The liquid names are down 10% apiece. Mitesh Thakkar, Jindal Steel, Indiabulls Real Estate, HDIL, stocks which were probably doing reasonably okay, but all of them down quite strongly. Would you initiate any trades here?
See, I think on Jindal Steel, because the entire steel pack and the metal pack is coming down, you might want to buy an 80 strike put, or if you get it around, you can sell it with a stop at about 87 and look at targets of around 76 over here. HDL is something which I'm not sure I want to short. It's just trading at a very important level of around 70, 71. Intraday low being 70 to 30. So I think as long as the 71 level doesn't get taken out, I'll not go short over here.
The other thing is that the premiums on the call options have completely collapsed. I was just looking at, while I was mentioning that the put options have gone up quite smartly, just look at what's happened to the current series calls, and they've just gone down quite dramatically. I mean, the fall on the 7,800 call option is more than the price of the option currently. There's been more than a 60-70% fall, and that would probably be the case as well. C.K. Narayan, very quick comment. Would you play contra? I heard you mention in the morning that we may be, and Sandeep Sabharwal is echoing that view, that we may be close to a panic. I mean, this may be happening because of panic, we may be close to a bottom. Would you buy any options or the calls, 7,900, 8,000 for the current series?
No, I would not buy an out-of-the-money call. I would buy an at-the-money call. And in fact, buying call is what makes sense. So I would buy a 7,600 call. Why should I, risk myself by buying out of the money call?
Okay.
At the money call is what makes sense.
Okay. So maybe for somebody who's wanting to just have a bit of a cushion, if you have short positions at the money call, 7,600 call option has lost almost 100 points in today's session as well. That's a dramatic fall coming in. But that's a trade for the brave-hearted right now. The signs are all very, very bad. Let's see if the Dow futures are indicating 2.5%. If the Dow reverses a bit of trade, then we might be in for an interesting start tomorrow morning. But for now, it doesn't look that great. And Tanveer, the large caps have had a dramatic fall too. I mean, yes, the mid caps are down. The large caps, not a single Nifty stock in the green.
No, not a single Nifty stock in the green. And broadly, you have commodities which have been hit hard. And on the other side, you have financials, which has largely been a function of high debt, NPAs, asset quality concerns. So those are the weaker pockets. The financing side and the commodity basket where the pain has been most centered. So for the headline indices, we are closing at sub 7,600 levels, closing closer to 1-year lows for both the benchmark indices. For the Sensex, in fact, we took that mark out for a bit. So 2.25% loss for the benchmark indices, and 4% for the small cap index, close to 3% for the mid cap index. And like Neeraj said, I mean, I could count down the losers, but like I pointed out earlier, it's really commodity led. So Vedanta, Ken, BHEL, Tata Steel are your key prominent losers in the session today, followed by some of the key financials. So Axis Bank, PNB, Punjab National Bank, Yes Bank, all follow next. No, there's no relative strength in the market. Perhaps the least decline has come in the IT space, TCS, Wipro, but they've also closed lower.
Yeah, and this was a pocket that was holding out yesterday, but not such luck in today's session. And we've highlighted almost all the top losers in trade, but just for the benefit of people who are maybe just tuned in, wanting to get a sense, it's looking bad. The small cap index is down 3.8%. On the 500 top traded stocks, it's real estate and metals which are taking the carnage. So SD Aluminum, Ansal Properties, Jindal Steel, Reliance Industrial Infra, Indiabulls Real Estate, Jai Corp, Dhanlaxmi Bank. Sorry, I'm going too fast. But yeah, these are Jai Corp, Reliance Industrial Infra, Reliance Infra, Reliance Capital, the ADAG group, the entire ADAG group also punctuated with losses. Ken India, Tanveer has highlighted that, down 8%. Diwan Housing Finance, 7.5% at 213, and this is maybe 20 points away from its lows as well. JK Tyre, and obviously there will be pain for companies such as JK Tyre. The yuan factor 7.5% down. Adani Enterprises at 79, that is down. Adani Power at 31, that is down 7% as well. Needless to say, a bunch of stocks in the red, and there's hardly any green. Maybe, just maybe, highlight a couple of stocks which are probably holding out. I think Monsanto was one which was holding out, so a good move for that one. And IGL was looking okay, Petronet was looking okay for most part of the day. They'll come up on your screen, both these stocks. Thermax, marginal upsides. IGL should come up on your screen, maybe there's some uptick there. And some of the crude beneficiaries, Kansai, Nerolac, the Shalimar Paints of the world, maybe, I don't know about a Shalimar, I'm just guessing all the paint companies should essentially be having a good day. Godrej Industries marginally in the green. Asian Paints and Shalimar Paints will also come up on your screen. Essentially the paint pack, if crude has fallen so much, they should be benefiting from it. Not so much for a Shalimar. Asian Paints was trading okay. J Kumar, probably one of the only infra companies in the red as well. Interesting. That is in the green. That is marginally holding out. Nevertheless, let's get in fun comments from all our experts. Sandeep Sabharwal, before we let you go, for the brave-hearted, for the people who believe in the long-term story, these or around these levels, good to buy, or would you wait for the dust to settle a bit?
I think it's good to buy. I think who knows what the bottom is. Maybe the bottom was made today, maybe it will be made tomorrow. So I think it's time to buy for sure.
Wow, that's a confident Sandeep Sabharwal saying it's time to buy for sure, selectively, I'm sure. Mayuresh, what would your advice be to your clients? What would you be doing in your PMS schemes?
No, clearly, Neeraj, I think have a very stock-specific approach, buy stocks in a very staggered manner, and again, I think look out for names where at least looking at the current market situation, I think the earnings trajectory would be far better compared to some stocks or sectors where the earnings outlook, at least over the next 2 to 3 quarters, might not appear so encouraging. So I think have a stock-specific approach in these markets and try and find stocks where the valuations at least are not too expensive compared to their historical averages.
Okay, gentlemen, Mayuresh, Sandeep Sabharwal, thank you so much for joining in and giving us those perspectives. So that's the fundamental view. Do the charts suggest the same? That's the question. Mitesh Thakkar, 7568. What do the charts suggest? Could there be more downside?